Hello friends. In today's video, we're going to talk about one powerful lesson for new investors. Extraordinary things can happen in the stock market. And at the end of this video, I will play the real clip of Warren Buffett so you can hear his exact words yourself. But before that, let's understand the message clearly, in simple language. Many new investors enter the market thinking it's an easy game. They see stocks going up. They see people making money. They see apps that allow them to trade instantly. And suddenly, trading 30 or 40 times a day feels normal. It feels smart. It feels fast. It feels profitable. But before you try to beat the market, there is something you must deeply understand. Let's imagine this. Take the 20 largest companies in the world by market value today. These are giant companies, powerhouses, names everyone recognizes, companies worth hundreds of billions, even trillions of dollars. They look unbeatable. They look permanent. They look like they will dominate forever. Now, here's the question. How many of these top 20 companies do you think will still be in the top 20 30 years from now? 5? 8? 10? Maybe most of them? Now, here's the shocking truth. If you go back about 30 years to 1989 and look at the 20 largest companies of that time, something incredible appears. Not one of them remains on today's top 20 list. 0. Think about that carefully. These were the strongest companies in the world. They were massive. They were dominant. They were admired. They were considered safe. And yet, 30 years later, none of them are still at the top. They didn't disappear, many still exist, but they are no longer the giants they once were. That is the power of change. That is the power of time. That is the reality of markets. And this is the first big lesson. The world changes in dramatic ways. In 1989, investors believed they understood everything. Markets were efficient. Experts were confident. Wall Street was confident. The economy looked advanced. It wasn't the Dark Ages. People thought they knew which companies would lead the future. They were wrong. Not because they were stupid, but because the future is unpredictable. Now let's look at another angle. In 1989, the largest company in the world was worth about $100 billion. Today, the largest companies are worth around $2 trillion. That is a 20 times increase. And the 20th largest company has grown more than 10 times compared to that period. So what does that tell us? It tells us that capitalism has worked incredibly well. It tells us that over long periods of time, businesses grow. It tells us that equity ownership, owning pieces of companies, has created enormous wealth. But here's the key. It wasn't about picking the perfect company. It was about being on the ship. Let me repeat that. It was about being on the ship. Over 30 years, the overall market moved forward dramatically. Even though individual companies changed, the system as a whole progressed. Some companies fell. Some companies rose. New giants were created. Old giants faded. But investors who simply stayed invested in a broad group of companies, especially in the U.S. market, did very well. This is why Buffett often says that index funds are powerful, because trying to predict which specific company will dominate 30 years from now is extremely difficult. But believing that innovation, productivity, and economic growth will continue, that's more reasonable. Think about this psychologically. When a company is number one, it feels unstoppable. When a country is dominating, it feels permanent. When a market is booming, it feels like it will never stop. Japan once had an extraordinary boom market. Japanese companies dominated the top rankings globally. Today, none of them are in the top 20. Did Japan disappear? No. Did the companies vanish? No. But leadership changed. Innovation moved. Capital flowed elsewhere. And that's how markets evolve. So when you feel extremely confident about one stock, when you believe this can never fail, remember the top 20 list from 1989. None of them survived at the top. And here's another important insight. The United States started as a very small country. In 1790, it had less than 0.5% of the world's population. It was not the largest. It was not the strongest. It was not the richest. Yet today, many of the world's most valuable companies are American. This wasn't an accident. It wasn't magic. It was a system that allowed innovation, risk-taking, and long-term growth. That's why Buffett emphasizes believing in productive systems rather than chasing short-term trades. Now, let's bring this back to you, the new investor. When you open your trading app and think, I'll just make quick profits, I'll trade all day, I can outsmart the market, ask yourself this. If professional investors in 1989 couldn't predict the next 30 years correctly, if experts couldn't identify which giants would stay on top, what makes us think we can predict next week perfectly? The lesson is not that you shouldn't invest. The lesson is not that stocks are dangerous. The lesson is humility. The lesson is patience. The lesson is long-term thinking. Over time, markets reward productive assets. Over time, businesses innovate. Over time, new leaders emerge. But over short periods, chaos, volatility, overconfidence, mistakes. Buffett's message is simple but deep. The world can change in very dramatic ways. So instead of trying to be a hero trader, focus on being a patient owner. Instead of trying to predict which single company will be number one in 2056, consider owning a diversified group of companies. Instead of reacting to every headline, zoom out. 30 years is a powerful teacher. And here is the most important takeaway. Extraordinary things can happen. Companies can grow 20 times bigger. Entire industries can be created. Technologies can reshape the world. But extraordinary change also means uncertainty. The leaders of today may not be the leaders of tomorrow. So your strategy must respect that reality. Diversification protects you from being wrong. Time protects you from volatility. Patience protects you from yourself. The stock market is not an easy game. It only looks easy during strong bull markets. But real wealth is built quietly through discipline and long-term ownership. If you simply stayed invested in a broad basket of equities for 30 years, history suggests you would have done very well. Not because you were brilliant, but because you were consistent. So before you try to do 30 or 40 trades a day, pause. Ask yourself this: am I speculating or am I investing? Am I reacting or am I thinking long term? Am I chasing excitement or building wealth? That is the difference between short-term noise and long-term success. And that is the core lesson from this talk. Now, as promised, I will play the real video clip of Warren Buffett so you can hear his exact words and see the original context yourself. Pay close attention to the example of the top 20 companies and how dramatically the world changed in just 30 years. Here is the original video.
Just go over two items that I would like, particularly new entrants to the stock market, to ponder just a bit before they try and do 30 or 40 trades a day in order to profit from what looks like a very easy game. So I would like to go to slide L1. So put that up. And on March 31st, I ran off a list of the 20 largest companies in the world by stock market value. And those names, many of which will be familiar to you, they were led by Apple at slightly over $2 trillion. And it went down to the number 20th was worth 330 odd billion. But those are the 20 largest companies in the world by market value on March 31st. Now, if I had I was hoping I could get a little quiz machine so I could have everybody weigh in on this answer, and we could flash up a little later, but proved technically impossible. But what I would like you to do is look at that list. Starts off with Apple, Saudi Aramco is a pretty kind of a specialized company. It's I don't know whether it's 95% owned by the government or what, but it's essentially a country that's for sale there in terms of that business. But the top of the top 6 companies, 5 of them are American. So when you hear people say that America hasn't, it's not working very well or something of the sort, in the whole world, of the 6 top companies in value, 5 of them are in the United States. And if you think about it, we talked a little about this last year, but in 1790 we had 0.5% of the world's population. And a little less, we had 4 million people, 3.9 million people. 600,000 of them were slaves. Ireland had more people than the United States had. Russia had 5 times as many people as the U.S. did. Ukraine had twice as many people as the United States. So here we were. But what did we have? We had a map for the future, an aspirational map that somehow now only 200 after the Constitution, 232 years later, leaves us with 5 of the top 6 companies in the world. It's not an accident, and it's not because we were way smarter, way stronger, anything of the sort. We had good soil, had decent climate, but so some of those other countries I named, and the system has worked unbelievably well. Just imagine thinking of 5 of the top 6 companies in the world ending up with a country that started with 0.5% of the population just a few hundred years ago. But what I would like you to do is look at that list for a minute or two, if you want to, and then make an estimate, make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. But what would you guess? And think about that yourself. Would you put on 5, 8? Well, whatever it would be, I would now invite you to look at slide 2, or L2, which goes back a little more than 30 years, and look at the top 20 from 1989. And if you look at the top 20 from 1989, there's 2 things that should grab your interest, at least 2. None of the 20 from 30 years ago are on the present list. None. 0. There were then 6 U.S. companies on the list, and their names are familiar to you. We have General Electric, we have Exxon, we have IBM Corp. I mean, they're still around. Merck is down there at number. None made it to the list 30 years later, 0. And I would guess that very few of you, when I asked you to play the quiz a few minutes ago, would have put down 0. And I don't think it will be 0. But it is a reminder of what extraordinary things can happen. Things that seem obvious to you. Japan had this wonderful bull market for a very long time, so you had a number of Japanese companies on the list. Today there are none. And the United States had the 6, now we have 13. But they aren't the same 6. I would invite you to think about one other thing as you look at this list. 1989 was not the Dark Ages. I mean, we weren't just discovering capitalism or anything else. And people thought they knew a lot about the stock market and the efficient market theory was in, and it was not a backward time. And if you look, the top company at that time had a market value of 100 billion, 104 billion. So the largest company in the world, Tidal, in just a shade over 30 years, has gone from 100 billion to 2 trillion. At the bottom, the number 20 has gone from 34 billion to something a little over 10 times that. Well, that tells you something about what's happened with equality, which is a hot subject in this country. It tells you a little bit about inflation, but this was not a highly inflationary period as a whole. But it tells you that capitalism has worked incredibly well, especially for the capitalists. And it's a pretty astounding number. Do you think it could be repeated now that 30 years from now that you could take $2 trillion for Apple and multiply any company and come up with 30 times that for the leader? It seems impossible, and maybe it is impossible. But we were just as sure of ourselves as investors and Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. And I'll just give you one other example you might ponder. When you start feeling too sure of yourself. One thing it shows, incidentally, is that it's a great argument for index funds is that the main thing to do was to be aboard the ship, a ship. They were all going to a better promised land. You just didn't know which one was the one they'd necessarily get on. But you couldn't help but do well